this year could be one of significant sector rotation, which after the run we've already seen in the market. So we saw the carnage in healthcare last week, and investors are looking to add cyclicality to portfolios. Financials can check a lot of boxes, particularly if we start seeing better growth outside of the U.S. versus inside the U.S., because as global growth improves, and we could continue to see a modest increase in interest rates, and that would be good for the banks.
Are you all, Doc, are you optimistic about the earnings that are coming out this week?
Yes, I am.
Because if you look at a lot of the names on the list, they've had big gains.
Yes. In many cases, those are recoveries from the harsh sell-off. We talk about it time and time again. In some cases, as is the case, I believe, with Facebook and Google, that duopoly, they really own that space, Scott. And I don't think advertisers have been shying away from that space. And even with the additional overhead that they've assumed to take on the burden of greater security and responsibility, even with the missteps famously at Facebook, we're still seeing that stock, $50 plus off those December lows. So does it keep going? And should I be just as bullish as I am? I believe it's going to be justified when we see those numbers. Same thing in Amazon.
This is the week we look back on and we say we either justified the big move that we've seen, or we've thrown some cold water on it and say it was just too much, too fast, and not based on enough of the fundamental story.
I think if there's going to be a significant momentum change or a significant momentum push in the continued direction higher, it's going to come from a stumble in technology. Again, you're going to get Facebook and Microsoft and Amazon. You're going to get these mega large cap technology names. And if there's a stumble, then Mike's right, because I don't know if the market can absorb disappointment, significant disappointment from these major technology companies. You'll get a little bit of a correction in the marketplace. But that's where, for Mike to be right, I think you're going to have to see the negativity.
You see, I'll disagree with that. If you see a pervasive stumble in technology, yes, that's true. But let's go back to Apple in January. That was a major stumble, right? And the market did great in January.
I'm saying technology, Steve. I'm saying technology across the board, not an incidental Netflix like a prior
or
quarter.
Microsoft, any one, but because then you draw the conclusion that it's more, as I said, pervasive in the economy. But look, to me, the one company that's really going to tell us where the economy is, of course, Caterpillar this week. The others are all growth stories. Amazon, sure, they may say volumes are up a little, down a little, but overall, it's still growing. So that's where you have to look. Ford, also, we'll hear from Ford about the economy. Can we believe it or not, or is it just Ford products? What have you? Don't know.
Well, I mean, China's gotten better.
Right.
So yeah. Caterpillar's going to tell maybe a bit of a different story than it would have a month or so ago.
Agreed.
I think it's accurate. Absolutely.
Caterpillar's performed.
And we'll hear from UTX on China as well.
Europe is the real issue to me. China's taking care of itself. People that I talk to that have boots on the ground there, get great data from China, to the extent you can get great data, see that it's picking up. That's easy to see. But I was talking to Rick Reeder, and he's calling actually for the ECB to buy equities. He thinks that's a real possibility. What are you going to do, lower rates more to be, negative 100 bips?
That'll turn Europe into Japan. They better not do that.